Today, we are going to dive into what the heck is going on with the RV industry. Not only are RV manufacturers taking hits and massive losses, but now it's trickling down to the dealerships. Over the past few months, we've seen several dealerships shutter their doors, and now we're about to watch a dumpster fire with one of the larger nationwide dealers heading for bankruptcy.
We're going to explore the reasons behind this downturn and take a close look at one of the largest RV dealerships now facing a real threat of closing for good.
Let's start by putting this all into context and take a look at the latest market report. Now, remember, in August, we received June's numbers and we'll get July's data in September, so the information is slightly behind the current date. The RVIA reported, for those of you who don't know what the RVIA is, it's a national association representing RV manufacturers and part suppliers. And yes, if you bought an RV, you are paying to support them, but that's a topic for another video. So the RVIA, and I'm going to look at my screen here so that I can get these numbers right, I don't want to mess them up, reported a 5% increase in wholesale shipments for June 2024 compared to June 2023, totaling 25,308 wholesale shipments. Year to date, there are 178,596 units shipped. Looking at these numbers, shipments are down across the board, including in the previously popular Class B segment. Now, the one exception to this has to do with towables. Towables are the most affordable RV option, and they're not seeing as much of a decrease as the other RV segments.
But you know what? My favorite segment is the hardest hit.
Of course, it always seems that way. The hardest hit is always the motorized, and the hardest hit within the motorized category is always Class A RVs. So looking at the wholesale RV shipments chart from June of last year to June of this year, there was an increase of 16.3% in the shipments of travel trailers. And that's because it's the most affordable option in an economic downturn.
RV dealers right now are selling a lot more towables than motorized.
And there's a good reason for that. And that is because, you get to a point where you need to trade up, you need to get something else, you just want to get into RVing. And it's the most affordable way to enter into this lifestyle. And dealerships are having Class A's, Class B's, and Class C's sit in their lot because they are way more expensive. I mean, probably the most inexpensive Class C that you can get, and I mean a true Class C, not a B+, right, it's going to run you around at least $100,000. Heck, we even saw a Class C RV a few weeks ago in a lot for over $250,000. This is way out of the range for the normal working person right now, given this economic situation and the potential recession that we are headed into. And dealerships know this, and so they're hedging their bets on the travel trailers because they're selling more travel trailers, and that's why they're getting more shipments of the travel trailers. But if you look at all of the other segments, they are pretty much all in the negative when you compare them to this time last year. And what's really interesting about this too is this is the buying season. The reports that we talked about, the May report, the June report, the July report when it comes out. This is the season when people are usually buying RVs, and to see such a large downturn or such a large reduction in the number of shipments really says a lot about the health of this industry. So looking at fifth wheels, they are at a -1% from last year. Folding camping trailers, -32.4%. Truck campers, -13.1%. Overall, year over year from last year at this time, they're up 11.4%. And that is only because of the travel trailers.
I find it very interesting that even the folding camping trailers like pop-ups seem to have been hit pretty hard.
They're not as popular, and what's really kind of surprising to me, you and I, when we were at an open RV open house just a few weeks ago, we were looking at one of those, and we thought, how cool would it be to have like something that's easy just to do a weekend trip, to do some primitive camping, so to speak. And we were surprised that the one that we looked at that was a bare minimum kind of pop-up was over $20,000.
It was.
And after thinking about it, I was like, heck, you might as well just get a tent.
You might as well. Plus the smaller, less expensive travel trailers you can get for around 20. So why go with a pop-up?
Exactly. Yes, I think they're just pricing themselves out of the market. And maybe it was just the one that we were looking at that they had in the showroom.
Could have been.
You know, and of course, you know, we didn't do negotiations or anything like that,
No.
but you know. All right, so let's take a look at motorhomes real quick. Motorhomes.
Oh, I don't want to see that.
So we took a look at motorhomes last month,
Yes.
and they were way down. They had 472 shipments of Class A RVs. That is down a negative 36.2%. And I think last month we talked about it, and I think it was somewhere in the 600 mark. So we're really seeing huge declines here.
Well, you can't make a lot of shipments to a dealership that already has too many RVs on the lot.
And that's a good point, John. Why don't you talk more about what's happening on the RV lots?
When you go to these lots, they are now full of RVs. We've been to a couple of dealerships, at least 3 in the last year.
Last year?
In the last year?
Week.
In the last week? Well,
2
we've
weeks.
been to a couple,
last 2 weeks.
And there are RVs as far as the eye can see. So the selection is there. The prices are ridiculous. And they can't move last year's stock. They're still sitting there on 24s right now.
And you know what's even more ridiculous than those prices, John?
What?
Come on, John. What's even more ridiculous than those prices, John?
I can't think of it right now.
John, you should know what's more ridiculous than those prices.
Do you know? I don't know.
The quality.
Oh, that's always been ridiculous.
But there, it's not always. I mean, it's always been a bit, but not not like it is now. And there are people who have been RVing for decades who
Yes.
are just fed up. I can't tell you how many times we see in our comments
Yes.
people who have been RVing and enjoying it, but needed to upgrade at some point after 2019,
Right.
and they're just so fed up and so frustrated. And this is across the brands, no exceptions. We've had people talk about Newmars and how they're falling apart on them. We've had people talk about Brinkley's and how disappointed they are because they thought that this was going to be it. You know, and I think Brinkley might be suffering a little bit from growth.
Yeah, I think it's growth.
They're growing very fast. They have many different models now, and I'm hoping that they get it under control. But I must say that I do hear they are very, very responsive to their customers.
And that's a good thing.
And that's a good thing. But across the board, quality. Folks, let me know. If you were in the market for an RV right now, would you buy one? And if you're not buying one, what are the reasons why? Is it because of the quality? Are you afraid that you'll get something that'll just fall apart? Let us know. We really want to know if we're on point with this or not.
Right.
Okay, so let's get back to these numbers real quick. So camper vans, shipments are down negative 43.1% from this time last year. And this is supposed to be the height of the season. Then they have mini type Cs, which some people call Class B pluses. They're down negative 26.5%, which doesn't surprise me if they're over $200,000.
They are.
Who's going to pay?
Expensive.
I'd rather buy a van and convert it myself and save a lot of money.
Yeah.
Even if I didn't know what I was doing, I could watch YouTube, learn it, and probably put out a very high quality product myself for me
yes.
that has what I want for less money.
You could.
Would anybody else do that? I'm just curious. Okay. So for all motorhomes, shipments are down negative 33.2%, and overall for total RV shipments, both the towables, camper pop-ups, truck campers, the shipments are up 5% from this time last year.
Yeah. That is unique.
If you look at the graph, it tells a very positive story of improved shipments over the past few months as a total combined. What it doesn't tell you is that these shipments are just sitting on the lots.
Right.
And this is causing a lot of problems for dealerships. Now, the true gauge of the health of the industry is in registrations. Registrations tell you how many RVs have been sold by capturing how many people have registered RVs with their local motor vehicle administration. Let's dive into the recent market analysis that talks about the registrations or the sales, and then we'll go into a deep dive on the latest dealership casualty that we mentioned in the very beginning of this video. But first, I'd like to ask you guys if you're enjoying our content, if these market analyses are providing some value for you, please go ahead and subscribe, hit that like button, or give us a thumbs up. We really, really appreciate it. It gives us the motivation to keep on going.
Motivate us.
Thank you. Yes, please. Okay, so let's do a look into this. So there were, and once again, I've got to look at my numbers. There were 35,014 retail registrations recorded in June 24, which is a 20.7% decline compared to the 44,170 total in June of 2023. This is all according to the Statistical Surveys, Inc., which is a Michigan-based subsidiary of Trader Interactive. They monitor retail and consumer data for the RV industry. And this is where a lot of people get their data from on how the industry is doing. Year to date, there have been 188,843 retail registrations in 2024, which is and that's, we're going from January to June.
Right.
That is an 11.2% decrease versus the 212,691 total for the same period in 2023. And once again, motorized RVs hit hard.
Yes, it would be
hit hard.
Nobody wants them because they're way overpriced and the quality's not there.
Well, we were looking at some new ones and some old ones, but we were just at an open house and I was shocked. I mean, the amount of money that they want for these things is just it's more than a mortgage for a rapidly decreasing asset.
It is. They were very expensive. I mean,
unless I'm very wealthy and I just have an abundance of cash to put out on these things.
Do you?
Well, if I did, John, we'd be driving a Prevost.
Oh, that's right. We would be.
I don't. Unless you won the lottery and didn't tell me about it.
I would tell you.
I sure hope so.
I'm sure I would.
Any ideas, John? Okay, so let's talk about this dealership. Now, let me preface this. They haven't said they're going bankrupt, but they have all the signs of a business that is in deep, deep trouble. So RV dealer Lazy Days just posted its second quarter earnings, and it is not looking good. Here's the info from the press release. I'm going to read this because I don't want to get it wrong because there are lots of numbers and millions of dollars and all of that. So the total revenue for the second quarter was $238.7 million compared to $300.4 million for the same period in 2023. That's a revenue difference of $69.7 million. Let that sink in. $69.7 million for just one quarter.
That's a large chunk of change.
That's a huge hit.
That is.
You cannot continue to do business with those kinds of losses.
And I think that's probably the reason for what we found out recently.
About the campground closing?
The campground closing.
I'm not sure. There was somebody new who came in, and I'm not sure what's behind that, but maybe, I don't know. And when we look at the total revenue for 6 months, so from January of 2024 to June 30th, 2024, it was $509.3 million compared to $604 million for the same period in 2023. That's a difference of $94.7 million in just 6 months. Folks, they are bleeding.
So that's revenue. What happens when we look at net loss? For January of 2024 through June of 2024, the net loss was $66.2 million compared to a net income of $3.3 million in the same period in 2023.
Holy cow. So this year they've lost $66 million, roughly.
Right.
But last year they made 3.3 million.
That is correct.
That's a lot.
That's a huge difference.
Holy cow. That's just no business can sustain those types of losses. They need an influx of cash. They have got to sell RVs.
Yes.
Something has to happen. I just can't see them continuing this way.
No.
And I think so. John North, he's the chief executive officer. Now, I'm also going to explain that, this is a publicly owned company, right? So they're on the stock exchange. And so they have certain requirements to put out reports on a quarterly basis.
Right. They have to report.
Yes. So I'm going to read to you what John North has to say. He says, our team has, because they've got to make changes.
They
have to do something. They have to take desperate measures at this point, and I think we're going to see more of that, right? So our team is focused on maintaining healthy vehicle inventory, improving finance and insurance per unit, and achieving substantial total gross margin improvement sequentially. However, the seasonal improvement in sales volume we had anticipated to occur now, right? Because this time period, this is when people are buying, right?
That's
it's
right.
going to start dropping off soon. What's going to happen when it starts dropping off? So the seasonal improvement in sales volume we had anticipated to occur in the second quarter did not materialize.
Of course it didn't. Everything costs more and the quality is bad.
John, I wish I could have saved some of the quotes from last year because we saw this coming even if they didn't want to admit it. Right?
Yes, we did. We saw it coming.
We saw it coming. We knew this was going to happen. And it was all of this, everything's fine, everything's great, we're going to do well, we predict that things are going to get better. And there are lots of things they didn't take into consideration. And it's compounded by a weak economy, high inflation, high interest rates, and terribly poor quality in the units coming from the manufacturers. No one wants to buy this stuff.
I feel like they're trying to sell less for more money now.
Yeah, and while we're seeing some discounts from dealerships, we're seeing advertised discounts of 45%, 50%. These things are just still way too high because we've seen such a large increase from 2020 to 2023 in the prices. And they're not backing down. And it's interesting, John and I have started watching the automobile industry too, because we're starting to see some similarities in both the quality issues that automobiles are having, but also the price issues where they're pricing their consumers out of the market as well. And I think on both ends, they're really missing the point. If they're an RV manufacturers, if any of you there are listening, because I know some of you watch us, some of my favorite brands watch us, right?
Right.
Put out a quality product. Stop let's just get them out. Put some quality gates in there, some checkpoints, so that people know when they're buying your product, they're getting a good quality product, and then they'll come back and you'll make even more money,
Right, return customers.
Return customers are so important to businesses. And I think they've lost sight of that. Okay, we've kind of gone off the script a little bit, John.
we have.
So let's get back to John North, the CEO at Lazy Days. He has to say, as of today, our new inventory is comprised of 26% model year 25 units. And we're in the 25 model year right now.
We are.
That's right.
That's crazy.
69% model year 2024 units.
That's a couple of units.
And they also have, and I don't have the percentage on this, but they have 140 2023 units remaining. And they're following a trend that we're seeing, right? Because John and I are having a harder and harder time finding Class A RVs on dealership lots. What are we seeing?
We're seeing a lot of towables now.
A lot of towables.
They're stacking the towables in there.
And the CEO continues and he says, as of note, over 75% of our inventory is towable product. If you've been watching our market reports, you know that motorized sales have been tanking. And the only thing sustaining the market at this time are towable units. And we're looking here with John North. And what's their focus?
Towable
units. Exactly.
But that's what's selling now.
I know.
Let's go back to North one more time. Given the current unit sales volume, we have implemented further cost reduction actions in August that should be substantially complete by the end of September.
The cost reduction actions that he's taking, he's anticipating that these will save them about $25 million annually. Now, whenever I hear cost-cutting measures, what is the first thing that you think of?
Cutting services or cutting...
I think about cutting staff.
Oh, that's...
I think about consolidating stores.
Yes.
And I think about closing stores.
Yes.
Right? That's exactly what he's doing, because if you look at what's happening right now, they closed a Texas location.
Right.
And they also consolidated 2 locations in Arizona.
All right.
And, the way he says it sounds very positive about what they're going to do, but he has to, right? Because he's responsible to shareholders. It is not his company. And it gets worse. There's more to the story than what just came out in that press release. And I read in bizjournal.com, it says, the company's lenders agreed to waive financial covenants during the last quarter of 2023 through the first half of the year. It was a temporary waiver that recently expired. So I also read or heard that Coliseum Capital Management is planning to advance another $5 million against their outstanding mortgage facility. So, when RVs are on the lot, just like with cars, right? These dealers are paying money for these RVs, right? They take out loans on these RVs. When the RV gets sold, the loan gets paid off.
Right.
That's that, right? But they're accumulating so much debt that it sounds like they're having a difficult time making these payments. And so they need more capital, more investments coming in to help them continue to keep these RVs on their lots. There's only so much money that people are willing to pour into a business if that business continues to not make a profit or to lose money. So I'm really, really worried. So they did get some additional funding to get them through whatever the $5 million you can get them through.
Right.
I don't know the exact terms of it. I wasn't able to find that, but so they'll be around for a little bit longer. So you may wonder why other dealerships are not in the news, right? Or you're not reading articles about Blue Compass. You're not reading articles about General RV. And like I said before, it's because Lady Z Days is a publicly traded company. So they are required by law to report to their shareholders and to the SEC. And so that's why you're not having these earning calls from these other larger dealerships. But I wonder what's happening behind the scenes with them. My thought is it can't be too much different. It can't be too different.
Especially when we go to someplace big and see a sea of RVs just sitting there.
It's really concerning because, John and I, we've been saying a lot of negative things about the RV market, but we really love this lifestyle. I mean, we're part-time RVers. We'd like to at some time be a most-time RVers, not full-time, but most-time.
And I mean, we're still shopping around, and that's part of the reason we know about the car market, because we were thinking about
about getting a fifth wheel.
And I was shocked, people, at the cost of pickups.
I know.
I could not believe how much they cost.
It's really insane. Be on the lookout. I think we're going to be in for a wild ride in the next couple of months. If you want to learn more about the quality of the RVs and what we've seen at our most recent RV shows, check out this video right there.
It's always right there.
Right there, John's face.
Yes.